Welcome back to another Chargepoint update video. So in tonight's one, we're having a quick look at SBE stock because, it's becoming closer to the merger. And I think it's getting to that point where we need to be asking ourselves what we are looking for within this stock. So of course, if you do want to see a short-term, perspective where we look at what's going to happen leading up to the merger, that is in last night's episode. It will be carded in, and if it's not carded in, it was obviously in last night's video. So if you want to scroll down and view that, you can. But yeah, in this one, we are focusing on the long term because a lot of you guys are asking what my views are for the long term, thinking that my 50 times estimations are a bit incorrect. Now, please don't get me wrong. I'm not saying that the stock is going to 50 times because I am not a financial advisor. I'm not even saying that is my predictions, but I think it is possible when we consider the market sector and all of that stuff. So that is what we're going to be talking about in tonight's episode, what I see for the stock in the long term. So if that does sound good, please do leave a like and subscribe. We are trying to get to, 1,590 by tomorrow. I would love that to happen. So if you guys can help us, it would be massively appreciated. If you want to come and join us on Discord, you can. That's all about stocks, and the link to that is also in the description. So let's just jump straight into this episode. So you know what, when we have a quick look out on the 6-month chart, we can really see the effect that the merger has had. Obviously, hype leading up to the merger has driven us to this point where the stock has increased massively. If we look from the highs, we are looking at 123%, and that is not even on the highest point. We're looking at 141% on the highest point, so massive gains have been made on this stock. Even if you'd have held it until now from the low points, you'd be up 113%. And I'm sure it's getting to that point where a lot of people are saying, is now a time to sell out? Is it getting to the point where it's overhyped? And my personal opinion is, not really, no. I mean, it's getting to the point where, yes, if it goes up another $10, $15, we are probably going to see a retraction or a sell-off of about, maybe $10, getting back to this point where we are at now. But where we are at now, we've got to consider, the amount of hype which is around this stock, and we've got to consider what the company actually does. More on that in just a moment, but just to simplify it for now, I think it's important to, understand that the fact all stocks when they come onto the market are kind of, valued at a low range. A lot of these SPAC stocks, when they come on, they're about $10, but with time and with the merger, depending on what company it merges with, obviously the price will adjust mainly after the merger once it gets back into its actual company name and its actual ticker symbol and whatnot, but still sometimes in the merger if the stock is hyped enough. But I think that the stock will get to a point where it's comfortable and where the company should be sat at. Now I do believe that Chargepoint should be sat higher than $32 in the future. Right now, I think $32 is a good point for the stock because, the merger hasn't gone through, whatnot, all this stuff. But I do still believe, even if we do sit until, the time of the merger, if we sit at $32.90, I still believe we are probably going to see a bit of a sell-off as hype does come out of the market. But yeah, that's all we're going to talk about when it comes to the merger, because the main focus of tonight's episode is the long-term future. So of course, looking into the long-term future, we do need to look at the market sector that this is in, like I said, and looking at that market sector, there are over 1 billion vehicles in the world, and this was in 2010 when this study was conducted. All of this data is according to Wikipedia, by the way, but yeah, Wikipedia are saying that there was 1.015 billion motor vehicles in the world in 2010. I think it's important to note that the majority of these vehicles, especially back then, but even still now, as this graph will show us from the Swedish car sales in 2020, that was in February this year, the majority of these cars being sold around the world are petrol and diesel. And I think Sweden is even setting a good example because 1/4 of these cars being, plug-ins or electrics is actually quite high in comparison to some of the other countries on the graph. So for the majority of countries, most of the cars being sold are either petrol or diesel. And you know how big, these oil industries are when it comes to gasoline and petrol and also diesel. The petrol stations and their stocks are worth actually quite a lot of money. Oil prices are high, and this is all about supply and demand. A lot of people do want oil and petrol because it goes into their vehicles. You need it, but in the future, with all vehicles potentially being electric, and of course, it is looking more and more likely that all vehicles, or at least most vehicles, are going to be electric, they are going to need charging or refueling in the same way, and of course, a company like Chargepoint can come in and do this. Now, I think this is all where, our supply and demand comes into this because, of course, there is not too much supply right now, and there is actually quite a lot of, demand, to be honest, because if you look at a few cities around the world, it's safe to say you can't really find charging stations. But ChargePoint have come along and revolutionized that in a way, and they do believe that they are going to do this 50 times in the next 5 years. They intend to expand the company 50 times in the next 5 years, making 50 times more charging points around the world. And I think it's very important that this is noted, because obviously when we look at this into the next 5 years, a lot more EVs are going to be sold in that period as technology does advance. So obviously that means that the demand is going to be higher and the supply is going to be higher. And in a way that Tesla kind of did by, getting in early, establishing their sector in the market early, they do have the potential to, grow a huge company. I can see this stock being worth over $100 in the future, because the EV market in general is hyped enough as it is. And, with a reason for that, with a main company, going along with that, if this can be the main company in the charging industry, it does have potential. Like I just said, we do have Tesla in the car manufacturing industry, but we don't really have our main players in the charging industry or in the battery industry, so there is still room for growth in these sectors, and I do believe that ChargePoint does have the majority to pick up a long-term, portion of that growth. So my personal opinions and predictions for ChargePoint stock are that I can see some long-term growth for sure. I would personally say that this stock is a buy, but when you do get in, it is going to be a very tricky one, because it's going to have to be, dependent on you, because with the way that we are seeing the stock move, it's a bit hard to say whether this is a good point to buy in or not. I would like to see it go down a bit before I did buy in, but I think I would still be waiting until after the merger, until things do stabilize. But that's just my opinions. Come and tell me your opinions over on Discord, and I will see you over there. Thank you for your time.